Let's analyze together Aston Martin. Beautiful cars, we all know that, but the thing here is like, is it a good stock to buy? First of all, guys, read the disclaimer right here in the video description below, and I gotta tell you guys, this is a very surprising stock in terms of the fundamentals, because right now we are watching here below the net income in semesters, in GBP, and the thing is like, it has always been in losses, and actually the last time it was in positive territory, well, I cannot see it here in the last 5 years, no, seven years. So obviously in terms of fundamentals, it doesn't look good, and probably this is why the reason why the stock is underperforming right now. Remember, guys, that after the hype of Fernando Alonso in the podiums and so on, the stock went higher, to nearly 400. But right now it's like with minus 73%, which is a lot, but it's justified in terms of fundamentals. Let's also take a look at the forecast of, by Wall Street analysts, because thing here is like, they are kind of optimistic in that sense. But the thing here is like, look at that, an average of plus 55%. One of them thinks the stock should go back to nearly 400 again. But the thing here is the forecast. I mean, the interesting thing about the forecast is the annual, I would say. The revenue is gonna be like improved over time, year by year, but it's gonna take a while. I mean, we're talking about the reported earnings in 2023. It was 1.63, and we have an estimate this year very similar to the previous year. And the best year probably is in 2027. The estimate is 2.52. That means that it should be trading at least way better than it is trading today. Not sure if they're gonna make into profits. The estimate here it says it does. By 2027 they're gonna be in positive territory. But the thing here is like, and this is my personal opinion, of course. When I invest in a company, the situation, buying at the bottom, where several years in negative net income, I don't like that. I prefer to stay on the sidelines. But I know for a fact, because I invest in companies when they enter into profits. But the thing here is like, they have to enter into profits right before you enter. And what I mean is like, maybe this stock is gonna continue to underperform for the next 3 years. You're gonna buy right now, for instance, and you're gonna have to buy again next year to mitigate the losses, the average the average loss every time, every year, until you get it right. And that's the problem with it. I don't like to invest in a company that is in that situation, but just before it, before the earnings that are gonna be positive. There are even sometimes that you imagine that we have like a positive net income in the next semester, and you're gonna see that the stock is not skyrocketing. It can happen too. Because you need more than 1 quarter maybe to realize that the company is a good one, and this is the problem. One semester maybe is not enough. You need like a couple of those, to see like the stock is gonna skyrocket in that sense, because the fundamentally speaking is getting better. At this point, this semester, the last semester, is completely horrible. I mean, that's the truth, because in December 2023, it was like a minus 8.50 billion, 55 billion. But right now it's double the losses. And that's the problem. When you want to buy a stock, it has to improve like this, like actually this rally is kind of justified, because the losses, they were getting better in that sense, that is like a minus 23, minus 14, minus 8. You can see that it's improving little by little. These are simple things. It's like people, they want to invest in a stock because they think the brand is super cool, and actually the cars they have, they're kind of super cool. But you need to follow the fundamentals as well. You just follow the technicals and you can do it. It's like, it's okay. But as soon as you see a downtrend, you have to get out, because fundamentally speaking, it's not good. This is the problem with this stock. In the future, it can change. Anything can change in the future. But the facts that we have right now they are not positive. The facts are not positive right here. And you have actually an estimate of -5 for the next semester. So obviously the thing here, and this is interesting, is like the next semester, they say this is gonna be way better than the previous one. And this is interesting, because if they have actually a positive surprise factor, for instance, we have an estimate of -5, and the reported earnings are kind of better than the estimate, the stock should skyrocket, at least for the short term. This is the theory. Yeah, this is the theory. When the factors are very important, because when you have like a positive surprise factor, they tend to compensate. Compensate, like this is going well. Like, okay, it's better than expected. So obviously it's gonna go up a little bit. This usually happens, with stocks such as Nvidia, Apple. Here is kind of different because we don't have so many Wall Street analysts, but the thing is, like, you have the data and the theory and you can apply it. Okay, so all the things that we can explore right here, the seasonals, and one of my favorite sections, you can see the performance and you can grab like an idea of how the stock has been performing over the last 5 years, 7 years, 8 years. And the thing here is like another fact, this is the reality about the stock. Look at all the years that we have right here. Only one positive year in 2023, along with the podiums of Fernando Alonso, but the rest of the years in negative territory, minus 25, minus 32, minus 42, minus 51, and the worst year ever, almost nearly minus 70%. So obviously you had to avoid investing in stocks like this, at least in when the situation is like that dramatic. If you think that the stock is gonna be in positive net income, that's a different story. But for now, it has always been in negative territory. And this is the result of it. It's like the stock is gonna underperform every time, because at the end of the day, investors pay the bill. And this is what happens. It's like if there is negative territory net income, investors are going to pay the bill at the end of the day. So that's the thing and the key takeaway that you have to understand about this situation. Remember, guys, to follow 20HT to watch more content like this. And also remember to watch more videos like this of 20HT. Actually, we analyze other stocks such as Porsche, Ferrari, other brands, EV brands. So a lot of good stuff right there. So see you in the next video. Thank you very much.